Hey, welcome back to the channel. So it's been a pretty crazy 48 hours here in the stock market, and the crypto market is interesting, we'll say. So we're going to talk about that, and hopefully by the end of this video, your fears, if you have any, are going to be a little bit eased. So if we take a look here, the stock market has faced its worst two-day decline in over 5 years, and fears in the market are at all-time highs. So that alone gives me a little bit of pause. It makes me feel a little bit better about the entire situation, because whenever fear gets extreme, what that signals is a bottom. Because whenever everybody, it goes back to that old saying, whenever everybody is fearful, you need to be greedy. Whenever everybody's greedy, you need to be fearful. So the fact that we're seeing such extreme levels of panic and fear in the market tells me that we're probably really close to a bottom here. And as soon as we start getting any good news, we're going to start seeing things rebound. So something to kind of hold on to there. So we're looking at the S&P 500 here, and it is just going straight down. And if we look at Trump's prior term, you'll notice that we did see similar reactions and volatility in the price, where price had just declined, due to tariffs, but then it moved higher, declined rapidly, and then it moved higher. And then, of course, you had the COVID scare here in 2020. So this reaction here isn't all that surprising. We take a look at Bitcoin, and it's actually holding up very well. I'm really impressed. We take a look here at the global liquidity indicator. You'll notice that global liquidity is going straight up. I can even zoom in here for you so you can kind of see it better. But as this global liquidity is just ticking higher, it's Bitcoin and the crypto market are highly sensitive to global liquidity. Now, the Fed, the United States Fed, is not increasing liquidity. They're starting to ease monetary policy, as we've seen them cut interest rates a couple of times, and they're cutting back on their quantitative tightening, but they haven't really started pumping liquidity. We're seeing other central banks around the world beginning to do that, and that's why we're seeing crypto holding up so well. And really, once we start seeing global liquidity rise, that is the signal that the bull run is actually starting. So I stand by the idea that we're just now starting the bull run. It might not feel like it, but I believe this is the true start. If you look at, if history is anything to go on. So if you come back here, you see global liquidity spiked above the EMA, the blue EMA here, and then that kicked off the bull run. That's where things really started moving. And then as global liquidity began to tighten, moved into a bear market. This was the 2018, 2019 bear market. And then in 2020, as soon as global liquidity spiked above the EMA, that's where things really started moving higher. And so for multiple years now, going back to 2022 up until now, we have been in a tightening monetary policy, and now we're seeing global liquidity spiking up, and so crypto is moving up, and it's sustaining at these levels. Now, the other reason that the stock market is crashing so hard and crypto isn't, it has to do with tariffs. Now, Bitcoin and Ethereum don't derive their value based on earnings or profits, but companies do. And whenever you have a company that is importing goods from another country and you slap tariffs on them, that means that the U.S. company, the importing company, it becomes more expensive for them to bring that product to a U.S. consumer. So what that means is that the stock market is repricing the value of these companies, because it's looking into the future and saying, okay, if we have all of these tariffs going into place, that means that the companies aren't going to be as profitable. They're not going to have as high of earnings, because the tariffs are going to eat into company profits. And so that's why they're being repriced right now, because company profits are what determine a stock's price, essentially. And to illustrate that, so come over here. So we got this news shortly, a little while ago. President Trump says that Vietnam's president told him they will cut tariffs that they're charging America to zero if they can make a deal with the U.S. Now, Nike gets a lot of their products out of Vietnam, and in response to this, we saw Nike immediately begin to reverse. So what's happening there is they're now saying, oh, okay, if, our company is going to be fine because a lot of our products come from Vietnam. So if tariffs are going to be, they're assuming that there's going to be a deal made where there's no tariffs being charged to Vietnam. They're pricing that in because now the company's going to be more profitable because they don't have to worry about the tariffs. So we're actually, it's kind of interesting to see that reflected in the price as it's happening. So, I mean, as soon as that news had dropped, Nike went from 52 all the way up to 58, and it looks like it still has momentum there. So really interesting. I expect it'll probably fill this gap here, come back up to 65. But moving on. So next bit of news is that the UK offered to cut tariffs on US beef and fish in response to these tariffs. So we're starting to see these companies coming in, and I think deals are going to be made. And as more these deals start rolling out, I expect that we're going to end up seeing a V-shaped recovery in the stock market. I don't think that this is something that I think it's way overblown. We're not going into a depression. That's not happening. So my recommendation would just take a breath. We're already starting to see countries coming out and saying, hey, we're willing to play ball. China isn't. They actually imposed retaliatory tariffs on America, which is interesting because they're in a unique position because they've been losing manufacturing to both Mexico and Southeast Asian countries for quite some time now. So they aren't in a very good position in that they are quickly becoming not our top manufacturing partner anymore. And if the United States is able to make deals with Southeast Asian countries like we just saw with Vietnam, that's going to encourage U.S. companies to manufacture goods and source goods from these other Southeast Asian countries instead of China. So what that's going to end up doing to China is it's going to put a lot of pressure on them, because if they lose their supply chains that they have established in those manufacturing jobs to Southeast Asian countries, it's going to be very difficult for them to come back over to China. So that could put more pressure on China to make a deal. We just have to keep an eye on it. China is kind of the wild card with these tariffs as to how they're going. This isn't politics. This is just macroeconomics here. So let's go ahead and continue on. So basically, the Fed, Jay Powell, he came out and he's like, we're not going to be doing any interest rate cuts or money printing anytime soon. We need to wait. And that kind of angered Trump a little bit. So he says, Trump came out and said that this would be a perfect time for the Fed chair, Jerome Powell, to quit cutting rates. And then he was saying that, Jay Powell's playing politics. Jay Powell's not really playing politics. This is basic macroeconomics. If you impose tariffs on other foreign countries, you will have inflationary effects in the short term. Absolutely. There's really no question about that. Long term, it becomes more questionable as to how it plays out, because it gets more complex. There's a lot of different working parts. It depends what other foreign countries do. Are they going to debase their currency? Are they going to do retaliatory tariffs, which results in like stagflation? So there's a lot of moving parts. But short term, Jerome Powell, he's very concerned about inflation coming back up because of the tariffs. So it's very reasonable for him to just take a pause and wait and see how things react. My intuition here is that this is going to be resolved within, I don't know timing, but I would say a few months. I mean, at the most. We're already seeing countries coming out and saying, hey, we need to get this resolved. We can't have this going on forever. Let's make some deals. So, I mean, it could be resolved here in a week. So just got to keep our eye on it and see what's going on. So Treasury Secretary Scott Bessent says Bitcoin is becoming a store of value. And this is interesting because to me, Bitcoin and Ethereum, for example, they're not store of values in the classical sense, because in order to be a store of value in the classical sense, what that typically refers to is like U.S. Treasury bonds, gold, or cash. It's very stable. It's something you can put your money in, and there's not a lot of downside risk. So what he's saying here is it's becoming a store of value. I categorize these as high growth assets with the potential of becoming a store of value as they mature, as they become more stable to the downside. And that's exactly what we're seeing. If we come back over here to, just looking at Bitcoin and Ethereum here, they're very stable right now to the downside to the stock market. So we're seeing they aren't 100% correlated. If the stock market goes down, Bitcoin and Ethereum don't necessarily crash along with it. And so that's what he's talking about there. As they're becoming more of a store of value, more mature over time, they're not exactly correlated with the stock market. So, all right. So I think that's pretty much it. If you want to stay updated on kind of my thoughts about what's going on, you can follow me on X, link in the video description. But until next time, y'all take care.